Alrighty, traders, good afternoon, good evening, and welcome to our first episode of our weekly investment draft. This is episode 1. And I've got the panel with me, but not only have I got the panel with me, yeah, that's right, Papa G. I became a grandfather last night and loving it to a beautiful baby boy. My son is absolutely ecstatic about it. And yes, it is a boy, and it's got all fingers, arms, legs, and everything. It's very healthy, very excited about it. I think that's the one thing we can be really, really grateful about and blessed about. And I really appreciate all the people who are saying congratulations. I've had it in the trading rooms, in my live sessions. Just absolutely love it. Thank you very much. Appreciate that. But we're going to go ahead and kick off with our episode 1 here with the weekly investment draft. And we're going to talk about currency, stocks, and cryptos in the session. Got the same panel as we have every single week. It's me, Chris, and Tyson. Our experts are going to be talking about opportunities this week. So if you have not got a pen and paper ready to rock and roll, get one right now. I'm going to wait for you. No, seriously, I'm going to wait for you. Go ahead. No, I'm just kidding. All right, we're going to get started. So let me go ahead and bring the panel up. And it is Chris and it is Tyson. Chris and Tyson, how are you doing today, buddy? Are you ready to rock and roll?
Ready. Happy Monday, everybody.
Ready to go.
All right.
Congratulations, Gary.
Yeah, for sure.
Thank you. I appreciate that.
Papa G.
Papa G.
Papa
Everyone says it's not
Giorgio. That's what we call him, Papa Giorgio.
Well, they're saying if it's not FX Big Dog, it's a Papa G now. So, well, I'm going to just go with FX Big Dog for the currencies. So I'm going to be like, in the day, I am going to be FX Big Dog. At night, I'm Papa G.
Nice.
All right. Well, let's get straight into it. And I'm going to give Tyson an opportunity to talk about stocks. Let's kick off with stocks first. I like to talk about stocks first. And traders, I want you guys to stick around until the end of the video. I'm going to go ahead and show you a trade opportunity that you can take right now in this session today that you can grab 20 pips out. I'll do it every week. We're going to do it again. Stick around towards the end of the video. We're going to go ahead and talk about that trade and talk about the setup. Tyson, kick us off with a stock option here.
Yeah, so interesting. In fact, I want to involve Chris a little bit. I think what Chris is doing in some of his portfolios is very, very interesting. I'm going to sound like a broken record and sound kind of boring here. I've got a pure speculation stock that I like at these levels. And there's a lot of risk in this stock, but I think the reward over the next 6 to 12 months could be huge also. Is Ride, Lordstown Motors. It's one of those stocks. I've talked about it before. It's trading for, $6.39 right now. I think in 2 years, it's Gary. I think it's a $50 stock or a 50-cent stock. I think
I like those.
Someplace in there. So a lot of risk, but again, you think about this as far as risk versus reward. Let's say it goes to 0, right? So if I'm thinking risk versus reward, I see potentially a 10x. So would I risk $1 to make $10? Yeah, I think I would. I think Ride, RIDE, is one of those stocks that provides that. It's not a short-term play. I'm not looking for. I think there are some big catalysts in September. So let's talk about September catalyst stocks. Ride is one of them. They're starting their production this month in September, coming into September. Another really big one, my biggest position, is Beachbody. Beachbody is officially launching their MyFX or MyFX, which I really like the name of that bike, which is a competitor to Peloton. Peloton just lowered their prices in response to Beachbody. Beachbody, big thing is this: they have plans to do like $190 million of marketing, Chris. $190 million of marketing between now and Christmas. You guys are going to see Beachbody everywhere. They're launching their products. One of my favorite stocks. Those two stocks have catalysts this month. Ride and Beachbody. Those are my two favorite stocks right now. But you have a very interesting play in kind of a bearish stance in the Qs and using kind of a bear call spread that I like a lot also.
Yeah, we've been talking about it for the last couple of months, Tyson. We're completely, just based on the technicals for me, we're completely overstretched on the SPY and the Qs. So I put in another bear call spread. I have one that started, in the 370 level. I was in the 370 by 372, filled for that for $1. So it's basically a 50-50 trade. I think I've given myself enough time. I'm going out till September 30th. The one thing I'm trying to put my finger on is what would be the reason? That's the one thing I've been racking my head around is what the heck is going to be the reason that the markets drop? I mean, we could say we have new cases in COVID and Delta, and like maybe when students go back to school and we're getting college sports kicking off again and cases start to go crazy, maybe that's enough to kind of put the kibosh on things. We also had the stuff going on in Afghanistan. We had the Jackson Hole Symposium. Fed's talking about their plan to taper with employment. I mean, the Fed's going to stay super dovish. The market loved what they heard over the Jackson Hole deal. This week we have non-farm payroll. What's going to be interesting is the labor shortage. If we start to see after Labor Day that we're not doing another round of stimulus for unemployment claims or jobless claims. If we have unemployment benefits extended again, then I think this, stock market continues to run hot. But if we don't, I feel like, the data plots, the Fed wants to see, manageable inflation and full employment. And we're a long ways off from full employment because we literally have like 7 or 8 million jobs that have not returned since COVID last year. And again, you talked about this a lot, Tyson, is, we were probably 5 to 10 years away from thinking automation is kind of going to replace the human worker. I think what happened last year in COVID was forcing companies to really think about what's going to happen now and how to plan for those next 5 or 10 years, because maybe it's wiser to start making the shifts into automation now. Maybe it's starting to build more efficiencies and earnings as opposed to maybe they sacrifice some revenue. Maybe they downsize a little bit. But I feel like the future of the worker, the human worker, is in jeopardy. And maybe it's 3 years away, 5 years away. But if you start seeing automakers building more, EV, which is less parts from your combustible engine to EV plays, and we've got this big green shift into 2030. So anyway, I'm getting ahead of myself, but I am in a bearish position right now on the QQQ. And the reason why is it's just ridiculous. Gary, you can attest to this. I mean, we know when a trend is overstretched, right? Technically, we're sitting at 350 bars on a daily chart. Like usually I see this on higher time frames, daily charts. I'm looking at 200 to 250, and we start making tops and bottoms, and we start to balance out these trends. The Qs keep running higher. The SPYs keep running higher. The Russell last week, Tyson, had a massive gain. We're like 7+% off the lows on the Russell. So it's just the market just keeps running hot on these little 2 to 3% dips. And I think there's going to be at least a bit of a cleanse coming in the next 30 to 60 days. That's why I'm bearish on the Qs, trying to make a little bit of money. I'm also long on volatility. I'm playing the VIXY and trying to get a nice spike up on the VIXY up towards $40. So when all said and done, it's probably going to clean out. Like I said, 7 to 10% correction is expected. If we get it, I'll probably make a good amount of money. I'm long volatility. I'm short on the Qs. I'll make some good money on it. It's a nice little hedge. And another thing you and I talk about a lot in Equities on Demand is the value versus growth portfolio balancing. And that's what we also are doing. Like I have a lot of value stocks that are kind of inflation proof, infrastructure friendly. And those have actually been some of my biggest winners. And I'm continuing to run them and ride them. And I think that's a safe play right now. It's low volatility, and they keep making higher highs, which I love to see, of course. And so I've got a nice blend of growth, like you said, a couple of great stocks there, and also value. So I'm trying to do that where I'm positioned for anything. And you and I have had to do a really kind of crafty job of doing that in Equities on Demand, where we have a balanced portfolio because a lot of uncertainties out there, a lot of things that are happening that are kind of weird correlations. And will we continue to just engineer our way to new historical highs and keep showing like everything's great, or is it truly a K-shaped recovery? And eventually somebody's got to acknowledge the downside. We don't know, but we'll find out.
I like it. There's a lot. Last thing real fast, Gary, we're in a really interesting area right now for the market. If you guys want to write some of these stickers down that I like, that there are some companies out there that I think are 10, 20x companies that are being beat up because they were SPAC plays, because growth is getting destroyed. Let's take Cathie Wood out of business, all that kind of stuff. But you got to be strategic about your plays. But here's some what I think are quality plays that should demand a higher price than what they're currently at, and that's Beachbody, BODY. Three others that I think are fairly safe plays right now, real revenue generating companies. Skills at this current level, SKLZ, Proterra, which is an electric bus maker, PTRA, and I'll put PaySafe at this value, PSFE at this value. Those four right now, I think, offer some really, really nice value with projected good growth and real revenue. Did we lose Gary?
Maybe. Let me make sure that we're still pushing live here.
Oh, we are live, dude.
No, he just switched this up. Okay, we're good.
Oh, okay.
Gary.
But yeah, those 4 plays. So again, revenue, growth.
Yep.
Yes, they've been, oh man, look at the charts are horrible, Tyson, until they're not, right? And we had this conversation in Equities on Demand. There's some stocks we're looking at like, okay, well, let's wait for it to prove itself. But we have a stock where we've been talking about let's wait for it to prove itself. We had an opportunity to add much lower, and the thing's rallied 40% since then. And so, how long do you wait before it's proven itself? And a lot of times you don't want to try to catch a falling knife, but you gotta know what you own, and you gotta be confident in it. And then once you get the value plays, once it's at the level you want to own, you buy. And all 4 of those stocks, Skills, Body, Proterra, and PaySafe, along with the ride stuff like that, are at levels that I'd be willing to buy right
now. And Tyson, just a quick question on that. Are we talking about long-term buys? Or are we talking about just short-term opportunities this week that you need to start positioning?
Great question. Body and ride actually could be shorter-term plays. I don't know about this week, but I think September is going to be key months for those 2 stocks because they both have catalysts with the bike rollout for Body and the truck rollout for ride. So they could be shorter term, but they're also stocks that if we get short-term big pops in them, great, I make some money. But I'm also willing to hold them long-term if I have to.
Okay, makes sense. All right, perfect. Great stuff. Are we ready to move on to cryptos?
Yeah.
Go ahead.
I think let's do it. So if you remember last week, we spoke about it. I've got the chart open right here. I've got the BTC dominance chart open here. And we've noticed that Bitcoin has lost a little bit of ground, but it's not really breaking out of that 51,000 level, right? It hasn't broken through there. And I've spoken about this before in a lot of my live sessions, and I'm going to say it again. We're going to see a little bit of a dip on Bitcoin, which we have seen off that 5,500 level, and it's coming. And if you look at the dominance chart right here, the dominance chart tells us that we're going to find a bit of support right about here at around about 27. Now, when we get down to about 27, we are going. Sorry, not 27, 43. If we get down to 43, which is right here, we just need to get a little bit lower than that. We are going to anticipate some rally. When that happens, then we're going to start seeing some Bitcoin rally. So, but we're not ready. I don't believe we're going to get to the $60,000 mark yet. I believe we're going to see a rally in Bitcoin, possibly to around about 55,000, and then it's going to stall because what's going to happen is it's still going to be in a larger range. And when it's in a larger range, we're then going to anticipate another dip in Bitcoin before the final big rally that we're going to take up to 60,000, maybe even above 60,000. So I'm not getting too excited about Bitcoin and any cryptos at the moment right now because I believe we may be in sort of like a consolidation phase right now, and then we're going to see some little bit of upside move, and people are going to get excited. If you go around and you look at all the YouTube channels about Bitcoin, you see all the hype. Oh man, we're going to get to 60,000, big hype around that. But the thing is, right now, I don't think they understand how technicals work. And you may think that Bitcoin, Ethereum, and all these altcoins don't really apply to technicals, and it does, especially in the short term, because we've got enough data in the short term to be able to establish what type of market patterns are forming in order to be able to tell us what's going on. And so I don't think, now I do know that yes, we do have big strong rallies towards the end of the year. We're not at the end of the year yet. I mean, we've got still 4 months to go before we, or 3 months to go before we get to the end of the year. So we've still got a few more months to go. And I think in December, I really believe in December, Tyson, I think you're the pro at this. I think in December is going to be critical. I think where we are in December based on price for Bitcoin will really define what type of move we're going to have in December's move. And I think between now and December, I think we're going to get this choppiness. I think we're going to get this fake rallies that people are going to think there's going to be a big move. But until I get the dominance chart back down below around about 43 again. In fact, what is the number? If we look over here at the chart, I'm looking for the dominance chart to drop back down to about, it looks like around about 42.66. So if I get it back down to 42.66, then I'm going to anticipate some sort of rally. So I still got to see price action moving quite sideways. It's going to be maybe in a larger range, but it's still going to be this type of movement that we're seeing at the moment right now, where price goes down like this. This is the expectation. Expectation was to drop, then to go back up again, and then to have that big drop, and then to have that big rally to the upside. And that's the Bitcoin rally that we're looking for there to break 60,000. Only once it completes this swing. So we still got quite a bit of swing action to take place before we start seeing that. Hey, that's what I'm seeing on the technicals, and I haven't been wrong so far. Even with Ethereum, when we started buying Ethereum at 300, before that big strong rally when it got to 3,000 or actually 4,500, we were buying at that point based on technical analysis. And I still believe in technical analysis in the short term in cryptos. So what are your 2 cents, guys?
Gary, I want to ask you, so looking at that BTC.D chart, the dominance chart, can you take a look at ADA.D, the Cardano? Because one thing that, reading up in the last couple of weeks, Cardano has been significantly outperforming Ethereum and Bitcoin. Cardano has had let me see, ADA USD. So we've had a pretty miraculous rally off the recent lows. Off the recent lows, we're looking at a 1,600% rally on Cardano, which is over the last year. But just in the last little bit, we go from about a month ago, we go into late July. We are looking at a pretty amazing rally. We had equal lows, and Cardano's up about 183%. So far this year, Cardano has, I think, 14 to 1,500% gains. Ethereum and Bitcoin are clinging to 200 to 400% gains. So if you look at the ADA.D chart, if you're using the technical analysis like you do, I feel like you're probably going to see a pretty clean fifth wave pattern, fifth wave trend. Would you expect there to be a correction, like an ABC correction coming back down? For that chart, it looks like something like 260. So I personally would love to see Cardano dip back down into $2 or lower. I don't know. I mean, what are you guys seeing out there in the crypto world? What's in the rumor mill as far as how Cardano is outperforming Ethereum and Bitcoin?
Well, Cardano is a future play. It is dubbed as an Ethereum killer.
Correct.
It's actually ran, or it's got a whole kind of organization that runs it. It's got a lot of funding behind it. Our Charles Hoskinson is the one. He's actually one of the first founding members of Ethereum. He broke off and created Cardano, and his whole theme is he's trying to base the code upon science. So it's a big science focus. And so I think that the potential for Cardano is huge. Again, I think that Cardano may be that cryptocurrency, fundamentally speaking, that is 100 times higher than its current value in 5 years, right? So you're looking for a moonshot coin. This could be your moonshot coin. You're looking for more safety, and I agree with Gary. You look for more safety, like in this time, cash or Litecoin, I think, is going to be a little bit safer than a Bitcoin or someplace like that. It really hasn't been that safe, but again, just based upon relative values, I like that. But I think Cardano is great. I wouldn't be buying it here, but it's one of those that I think you could buy now. And in 3 to 5 years, you say, man, I'm so glad I bought it right now. But it may not feel that good for the next couple months, if that makes sense.
Right. That makes sense.
Yeah.
I'm actually going to buy some Cardano right now.
Nice.
Yeah.
Because I can wait, but I'm gonna dollar cost average. I'll throw in some money right now.
Well, this is the thing. This is the thing, Tyson and Chris, that the speculation I've got on cryptos right now. I'm invested in a lot of cryptos. I've got a lot of money in Ethereum, as you all know. I've moved a lot of money to Ethereum. I've got Litecoin. I've got Polkadot. I've got Loopring. I've got Dogecoin. Woo, go Doge. I've got a range of cryptos. Cardano is a definite one. Avalanche is another one that you want to get in on. Avalanche as well. But the thing here is, I'm definitely waiting for this correction move, because there is going to be a corrective move in the altcoins. And that corrected move you've got to wait for it. We had a good rally with the Loopring, went up to 76. We cashed out some of the good profits. We got money. We moved that money more into more of these safe haven sort of cryptos. But coming back to your question about getting in on like Cardano, there's always a chance to get in right now. But it's like any sort of cost averaging strategy, right? The higher you get in, the more you have to buy lower when the market drops back lower. But some traders get in early just because they want to get something in case it blows out, and they don't want to miss out on that move. So you got that fear of losing out on that trade. But the good and the safe play on this is, or maybe the better play on this is to wait for the correction move. And there is going to be a correction move on this. If it was December or the beginning of December, I would say start getting in altcoins right now. But if it's not there, we've got a lot of play time, we've got a lot of correction moves still to take place. I'm going to wait for the correction move. I've already spoken to Cameron, myself, and a lot of my friends around me. I've already told them back about a month ago, start buying in big when we had that dip, and they loaded the bus on that. They are now well in the money on a lot of the cryptos. They've taken profit and they invest in other coins as well, like Polkadot, like Cardano. So this is definitely a good play. I just don't know if it's a good play right now.
Well, I'm in because I have zero.
No, I think
I'm going to test.
Play. Just it's one of those. It's one of those. When's a good time to buy Apple stock? Again, right. I'm not going to put that might be the most preposterous statement ever, like comparing Apple to Cardano right now. It could be like, oh yeah, that was an obvious statement 10 years from now, but right now come on. I mean, Apple's almost a $3 trillion company. But anyway, when is a good time to buy it? Now. Well, what if it falls 20%? Buy more. I mean, it's one of those stocks that it's like you just buy.
Yes.
And Cardano, I think could be. So I think you're going to look back in a couple of years, Chris, and be like, man, I'm really happy I bought it.
Sure.
Right?
Yeah.
However, saying that, there's risk in it in that what they're creating is amazing. However, is it really going to be better than Ethereum 2.0? Is Charles Hoskinson smarter than Vitalik Buterin or whatever his name is? I think both of them look kind of like aliens, but Vitalik looks a little more like an alien than Charles does. So if I'm betting on the aliens, I'm going to bet on Ethereum 2.0.
Nice.
Yeah, absolutely. Take a look at the chart right.
That was disparaging.
I'm going to show you an alien chart. Let me show you an alien chart. So this is what I'm looking at right now, Chris, from a buyer perspective. So we've gone ahead and rallied up on this last swing right here, all the way up here to just short of the 1.6 rate. So if we do get to the 1.6 rate, this is going to be very important. If we get to the 1.6 rate right here, so which means if we have a little pop right here to around about the $3, let's say 302, and then it comes back down again, that means that this is then going to be the next swing that we need to pay attention to right here. Right. And so the dip for me, and it's always going to be on the dip. I'm not going to buy on the rally, but if the dip comes right here and we get back down to around about let's call it $2.30. Maybe $2.40. Right here would be the buy zone right here to start buying and going long again. So this is what I'm looking for. I'm looking for it to take out this low right here, and that low is around about 247. So if I get the market taking out 247, that's going to be like heavy investment for me. Go ahead and start sell a house, sell a car, sell a wife, sell my grandkids, and just go ahead and throw. No, I'm just kidding. But yeah, that's where I'm going to start throwing money at that market right there. Yeah.
Yep, I like it. I've got chart alarms set all over the place on all my cryptos. And so basically from last week to this week, not a single one was activated. So recent highs haven't broken, recent lows haven't broken. And I just, I haven't participated in Cardano. I was intrigued the fact that it's been outperforming Ethereum and Bitcoin. So the fact that I have nothing in it, it's 281 right now. I jumped in at 281 for like test one. It's a small amount and definitely way more interested at 225, sub 2. Any pullbacks, there's pockets all the way down to $1.60. So at this point, what I can do is I can satisfy the need to think I'm missing out. So now I'm not missing out. Now I have some skin in the game. Now I'll wait for my levels. Now I'll wait for my pullbacks, and that's when I'll start adding more. So we'll get some. I think
that coins like Cardano, like Ethereum, like Algorand, stuff like that could perform really well because we're moving into this automation, this technology. I mean, this is not going anywhere. Mm-hmm. And Bitcoin could come down. And so if we go back to Bitcoin, right now we're still in a high tide rises all ships, a low tide sinks all ships environment. I think we're going to stay in that for a while, but I'll kind of wrap this up by saying I agree with Gary. In December is when to start looking for kind of a breakout with Bitcoin, but we're talking December 2020 from my standpoint. 2022 from my standpoint.
Yeah, and so I think we'll bring next week.
I think not this year. I think we're about about 15 months out in my mind from that. I think we're going to settle in and we're going to get spurts and stops and spurts and stops before that next bust. It's going to be about, I think, 6 months to a year before the next halving that happens in 2024. So I think we got some time.
Yeah, and I think NFTs, we'll have a conversation about that, specifically gaming. We'll talk about NFT coins next week. We'll have a conversation around that. I think that's also a great opportunity for those who want to start getting in. But a lot of the projects that are coming out, a lot of the projects aren't projects that you want to go ahead and get in on too long, because it's projects that go from 0 to 100, back down to 0, flat, and out of the door. So we got to make very sure that we invest in the right coins there.
Hey, really quickly, Gary Tyson, there's a great question here from Jeremy. He says, would it be crazy to sell Bitcoin and put it all in the ADA to get a better gain? I'm just going to share from my personal experience. I still like a portfolio play, and not like Gary. I wanted to kind of direct the question to you, because I know that you were pulling out of Bitcoin a lot to put into Ethereum, and you put into Litecoin, and you basically played like a lot of the altcoins instead of Bitcoin. I still have essentially now with Cardano, I'm in 10 coins total. And I like that kind of exposure. I like that portfolio vibe. And that way, if I'm picking one great one out of 10, hopefully that's a bit of a life changer in the next 10 years, 5 years, whatever. But if everything's rising pretty well, that's going to be a fun little play for the entire portfolio. Some will have bigger gains than others. But I don't know. I mean, I think that, of course, everything with cryptos is all speculation, but I wanted to address the question. Jeremy asked a great question on, what would you do, or what would you consider doing? I mean, for me, I'm going to keep the portfolio and keep kind of dollar cost averaging into those 10 coins I'm participating in. But what do you guys think about, pulling out of Bitcoin altogether, or moving things around like you did, Gary?
Yeah, well, I'm going to say this. Time to pull out of Bitcoin is not time right now, and I'll tell you why. You want to always build up. You see, I decided to take out of Bitcoin because I saw bigger opportunity to the upside on Ethereum. So, and I've tripled my portfolio based on the decision I made. I tripled my portfolio by moving out of Bitcoin when it was much lower down and put it into Ethereum when Ethereum was much lower down. And since we've had the rally, I've managed to triple my portfolio compared to having it with Bitcoin. So that was definitely a good move for me there. Right now, where Bitcoin is right now, you want to go ahead and trade all these altcoins, and you want to go ahead and keep buying in Bitcoin, Ethereum. That's where you want to put your profits. Also, ADA. You want to go ahead and put profits into those type of coins that are more of a long-term hold than sticking with these like Dogecoin. Dogecoin is a crypto that you want to get in, make quick money, and you can, and then take the money out and put the profits into something that's more stable, like Ethereum, like Bitcoin, like ADA, as well as, of course, Polkadot, things that are really like, I call it first level altcoins.
Great advice. Yeah, I agree. And if you look at crypto as a risk versus reward, I think so. I'm on record $1 million by 2032. Bitcoin. I think that's in the cards. That's 20x from current levels. I think if Bitcoin's at $1 million in 2030, I think Ethereum or Cardano could be $2,000 a coin. So do the math. You see what I'm saying? So I mean, it's so the reward potential of something like Cardano is exponentially higher, but you're still getting amazing results regardless of where you're at if the space continues to grow like I think it will.
Yep.
Yeah, I would absolutely like to have 3,000 coins of Cardano right now at the price is at right now. So when in 2020, when it gets to the numbers in 2020, those are the type of levels that you say, hey, listen, I want to retire in 10 years. Sorry, 2030, my bad.
When it falls way down to zero, Gary's like,
yeah, exactly.
What a great trade.
But yeah, if it gets you back up to the numbers we're hoping for in 2030, that would be a good time to say, hey, now I can go ahead and cash out and retire on that additional cash. And that's what I'm looking at.
One last thing is, guys, keep things in perspective. I see people coming out like, oh, man, Ethereum's going to hit, $45,000. You understand that if some of these coins hit the levels they're going to hit, like, you got people who are living in their mom's basements that are going to be like richer than Warren Buffett, right? I mean, we've got to use logic when it comes to like how high these coins. Oh, I know market cap doesn't matter, Tyson. Yeah, it does. Money is still. I still pay my bills with dollars.
Right.
I have purchased. I'm one of the few people that have actually made purchases with Bitcoin and Ethereum and Litecoin before, but there's not a lot of people who transact in this stuff yet. So again, it will go up, but it's all based upon kind of money supply, because the world still runs off of real Forex currencies, which I think is a good transition.
Hey.
Yep.
That was not planned, by the way.
It wasn't.
Well, let's go ahead and transform this conversation into currencies, and let's go take a look and see what's going on this week with currencies. Now, we know that the ADP numbers are coming out on Wednesday. Then we are following it up with the non-farm payroll coming out on Friday. We see that if you look at the data on the non-farm payroll, the data actually reporting that we're going to see lower numbers. Everything's going to be really terrible for the dollar on Friday. But the ADP numbers, which is almost like a leading indicator, is stating that we're actually going to see positive results on Wednesday. And so my 2 cents, guys, on the dollar right now, I like the dollar. I actually spoke about that in all my sessions today as well. I like the dollar play this week being bullish in the short term to about Wednesday, Thursday, and then start seeing a turnaround Thursday into Friday being bearish on the dollar. So today I'm thinking dollar correction for the next couple of days, and then dollar weakness as we're moving into the latter part of the week and into the weekend. Starting next week, dollar weakness all day long. And I can go to a couple of charts and go ahead and speak about that. But Chris, you want to say something?
Yeah, I wanted to ask, so dollar index, for the last probably month, I've essentially just drawn an arrow. We have a nice yearly pivot at 12,090. We have a monthly pivot back down to equal lows at 11,827. So if anyone's taking notes, 11,827 to the downside, 12,090 to the upside. Truthfully, fellas, I don't care which direction plays out. I'm going to make money either way because I'm long dollar Swiss and I'm long euro dollar. So I just think, I mean, we had our, one thing that I noted was August is usually a really important seasonal time where we have this tops and bottoms form in August. We have transitions from ranges to trends, or trends to, typically we see a lot of breakouts post summer. So look for volatility to increase in September, look for trends and breakouts to emerge. And so dollar is definitely a basket that I'd be watching really carefully. I do think there's room to travel, for the sake of volatility. The dollar's going to go somewhere. Aussie dollar, New Zealand dollar, dollar CAD. It's really going to be an interesting move to see, like, is it dollar versus commodities, or is it just dollar strength or weakness across the board? That I can't quite figure out yet. But we did see that when we had the dollar strength going into the highs of August, the only real reactions we had in the currency world for Forex is we had Aussie was really weak versus the dollar, CAD was really weak against the dollar, and New Zealand. And then last week they all corrected. So we're seeing a lot more movement out of commodity-based pairs than we are out of like the euro and the yen and the Swiss, which are more like kind of the safe haven and stable currencies. So like I said, 12,090 yearly pivot, bullish play on the dollar. I think that plays out over the next probably 1 to 3 months, or 11,827 monthly pivot, falling back in to find some structure, finding back at those FOMC pockets back in June. There's a really nice bullish channel on the dollar, in my opinion, that I think there's support down at the levels I mentioned. And I'd say if we're going to have kind of a final move up on the dollar before there's really significant weakness that kicks back in, I think that's the yearly pivot at 12,090. So I'm just, like I said, I'm going to make money either way, but I am very interested in playing Aussie dollar at lower levels, New Zealand dollar at lower levels, dollar CAD. I know we kind of had this interesting play last week, Gary, and great job, by the way. Your live trades you talked about last Monday, those 20 pips on dollar CAD played out really nicely. So I just want to get your thoughts on the dollar index, what you guys think, timeline wise. But I am wanting to buy, Aussie dollar, New Zealand dollar way, way, way lower. But I just don't know if we're going to get there. It's going to be an interesting play. Meanwhile, I'll just sit in my positions and essentially hedge the dollar with dollar Swiss long and euro dollar long.
I love that. We're kind of speaking the same language. I don't want to take any bullish or any bearish aggressive stance right now. Saying that, money flow says to short the Aussie dollar specifically just for this week, but I was conservative on it. Meaning my play for money flow students, I'm looking to sell at 73.31. We're not there yet. We got to push up a little bit. We got to push 40, 50 pips up. I'm looking to also sell at 73.70. I think we're going to push down to 72.40. Once we get there, 72.40, I don't know. I don't know if we break out and go to a rally, or if we continue to crater down. But I am looking for, I think we have, so we're kind of in that no man's land right now. So, because my stop's at 74.30. So if you do the math, I'm actually only looking for about a 60 pip move down, potentially another 130 pips move up, but I want to have a bearish bias because I think we're starting to top a little bit. My point is this: I'm with Gary. I'm looking for weakness today, tomorrow, into Wednesday. I don't know if that weakness is gonna, in the Aussie dollar, I don't know if that weakness is gonna sustain. We'll see, depending on the jobs number. I am becoming more and more of a long-term dollar bull. I don't know if I buy into, raising rates aggressively. I'm more on the Cathie Wood side of deflationary pressures, low interest rates for longer. I'm more into that because of what Chris mentioned at the beginning of this webinar, which is the jobs market, automation, technology, suppressing prices. We all complain about gas prices. I was just having this conversation with my wife. We all complain about gas prices, but here's the deal. 1995, the average car got about 12 miles to the gallon, and gas was $1.50. Now we're complaining about $3 gas, but we get 40 miles to the gallon. So do the math. You're still traveling the same amount of distance and spending the same amount of money. So it's not. So technology advancements have done a really good job of actually, sustaining purchasing power for individuals. And I think that the world we're in now is right for interest rates that are really low, maybe forever. And that's, I think, bullish on the dollar.
Yeah. Yeah. We keep talking about the other side of that, which is how long can we do this? How long can we keep, kind of engineering this bull market? We're now 13 years, fellas, 13 years into a, major low in the markets. Once we put in that bottom in 2008, 2009, 12 to 13 years later, we're still going. Pullbacks are few and far between. I suppose if we have our healthy correction for COVID, which was like over in a blink of an eye, within 2 months, we went from bear market and bull market in the same cycle. That's insane. But again,
to Chris, where else are you going to put money?
No, that's what I'm saying. Is like, that's what makes it so difficult. It's like people want to be permanent bears and call the tops. It's like, look, I'm willing to play some of it, but it's like, I just think we're silly for fighting it. It's like, remain in the path of least resistance. Understand that the environment right now is conducive for continued money getting pumped into stocks, riskier assets. You can make the argument that, people are making more money and, people's personal wealth is as high as it's ever been. It's like, well, I'd say that's within reason because
there's a big gap.
Yeah, I was going to say for those that are making money, it's ridiculous. And those that are not are wondering like, what the hell are you guys talking about? Very different story. So I think the gaps have widened. I think the K-shaped recovery is exactly what we're talking about. And I think that's why this is such a difficult, kind of like dichotomy of who the haves and the have-nots. So anyway, like to play the dollar, keep in mind, remember going into this year, how we had this conversation back in January. All of us were in agreement from the technical side that the dollar looked bullish. Now, it didn't happen yet, right? Like everyone's like, the dollar's going down. It's going to keep crashing. It's going to break those multi-year lows and the dollar's doomed. It's like, from a technical side, I was bullish on the dollar. Fortunate that's played out because that's been 8 months. If you've been strong the dollar this year or being long the dollar this year, that's played out pretty nicely over the last 8 months. So again, trade the technicals. That's the end of the day. That's what we need. Trade the technicals.
Yeah, and I think right now, we're all kind of saying the same thing. Trade the technicals and don't get so caught up in a position that you're not willing to change. So I'm bullish on the dollar, like Gary said, through Wednesday, Thursday, maybe. We'll see how it's reacting on Wednesday, Thursday. I might need to change my stance or take my trade off and kind of let this week kind of play out. So you got to be a little nimble also.
Yep.
All right, well, let's take it exactly what you guys said. You're right, trade the technicals, right? So what is the technicals really telling us? And Chris and Tyson, I like to dig into the weeds, deep into the weeds when it comes to technical analysis because it really tells us where these turning points are going to be at. And so we can position ourselves on the day when the news comes out based on where the technical is sitting. We know exactly which way to trade without the news coming out first, but really deciding that before the news comes out. And so if I go to the chart right here, and this is where I need you guys to go ahead and have a conversation around, it's like, this is the dollar index, and I'm going to go, by the way, I am going to go into a currency pair, and I'm going to go ahead and actually analyze it, But then I'm also going to go ahead, and I promised this to you at the beginning of the session, I'm going to go ahead and place a trade for you right now and tell you exactly where to enter and what to do on this trade to grab your 20 pips for the day. So this is how we're going to go ahead and do this. So if you go to the chart right here, and I look at the chart, I see we've come off those resistance here at the top of the dollar index. Price has moved down. This is a daily time frame. And so price is starting to work its way back down. Now, if you look at the chart right here, if anyone looks at the chart right here, they don't really know. In fact, they'll say, hey, we're going to be bearish on this, right? And rightfully so. But what they're not seeing here is some details inside the lower time frame. The lower time frame really reveals what the market's really trying to tell us. And so when I go ahead and look at this right here, this chart, and let me go ahead and clean up the chart so we can go into some new details here. So if you look at the chart right here, we had this big bearish move to the downside right here. Now, all you need to do is just go ahead and put your fibs on the top to the bottom right here and connect the dots right here. Now that we've got that connected, we're going to go ahead and take a look at where the market's sitting at, where the market's trading right now. Well, it's trading here at the 1.27 right here. It came off a 382 retracement, so which means this. In order for us to see dollar strength, price is going to go up above this level right here. It's going to take out the previous highs, and it's going to go into deeper retracement. You've probably heard this before. Market traders teaches us a lot about deeper C retracements, right? Where the market creates a retracement of a very shallow retracement, then leaves the AB boundary, and then comes back into a deeper AB boundary. This is what it is, and it's called an irregular flat. It's an Elliott wave structure, and it's very easy to be able to spot, and we spot it a lot of the times. And so what we're doing is we're looking for price to come above this level. Now, when price comes above that level, we're going to anticipate dollar weakness. This is where we feel like the dollar is going to lose ground and is now going to start weakening, and we're going to start seeing a downside move. So we're looking for price to move above 11,998, and when it gets above that, then we're going to start thinking bearish. Now, everything's based on news, right? ADP numbers are coming out. What did we say the ADP numbers are going to bring out? We said ADP numbers are going to bring out some positive results for the day. But then we said non-farm payroll is going to bring out some negative results based on what we see in the forecast right now. So if ADP numbers are going to bring a positive result to the dollar, then that'll cause dollar rally. That'll bring the dollar back up here. So let's say by Wednesday, if we're not above this level, we should push above that level with the ADP numbers. Then we're going to hover around here because now it's going to be waiting for non-farm payroll. And so I believe we're going to see price do something like this, where it's going to go ahead and rally up above here. Then it's going to sit up here. It's going to wait on Thursday. Then maybe start moving down Thursday evening. By Friday, news comes out. It's going to start pushing down. That's my forecast. I could be wrong, and it's not going to be the first time I'm wrong. But this is what I'm forecasting. I'm forecasting a weaker dollar to the downside come Friday. All right, based on what you're seeing right here. That's why I say by Thursday we could already start seeing the turnaround. Now, how do we connect this with something else that is tradable, like a cross against or a currency against the dollar? Let's go into Euro US dollar right here. In fact, you know what? Let me pull up a different one. Let me go with I think Chris, you brought up the Aussie. I believe it was, right?
Yeah, I was going to say Aussie dollar, New Zealand dollar are both, to me, really, really solid.
Okay.
So which one do you want to talk about? Because I've got specific levels. We talked about it today in my little Pulver report. What do you got there, Gary? Aussie?
Yeah. So let's match it up. Let's match it up with your levels right here. So this is what I'm seeing right here, Chris. I'm seeing price the same thing as we saw with the dollar, right? This big, nice rally right here. But then we saw a price go ahead and work its way back down. It worked its way back down. It rallied back up again. And now we're looking for price to drop back down below this level. So this is the level I'm looking for. I'm looking to buy below this level right here for a long-term rally on the dollar. And so this means I'm going to expect some dollar strength to drive the Aussie back down below 72.20. What is the numbers you got?
So I'm giving it a little bit more space. Here are my thoughts. I think that I like long-term Aussie dollar bullish. That's what I am looking for the next probably 1 to 3 months. I'm giving it the clarity of if the Aussie dollar can break above 7,400, I'm bullish on that one going back to 79 and 8,000. But that's giving it some kind of wide open space on the daily chart. Ideally, I'd like to see if the Aussie dollar can come back and revisit 71.50, which is way down at those lows, because we also still have a yearly pivot at 69.80. So if there's a way that the Aussie dollar can somehow touch 7,000, I'm long. Like from 7,000 down to like 6,700, I'm long Aussie dollar. Now, I think you have a better play to get in sooner. But I think I'm looking at the higher time frames with kind of the open space and, give that currency pair the freedom to run. So like I said, for me, my confirmation is if this pair breaks and closes above 74, I'm long towards 79. If it's going to be a little messy and choppy this week, I'm going to try to wait and see if we can revisit 7,100. And if we get 71, I'll probably throw in something smaller. I will definitely get long at 7,000. And then I'm willing to take it all the way down to like 6,700 and still stay long Aussie dollar. That's my probably the next 3-month play for me.
All right. So I'm going to say if the Aussie dollar trades below 72.80, we're going to chase after 72.20. So there's a 60 pip drop below that level of 72.80. We'll get you 72.20. Now keep it in mind, I'm not saying it's going to stop at 72.20. We may even go a little bit lower than that. I don't think we're going to get down to 69 though, Chris. But I think that once, especially with non-farm payroll, but I think when we get to that level, and again, I'm not saying buy straight away below 72.20. I'm saying go back to your strategies. Whether you trade in RightTrader Max, Turning Point Max, I don't care. Whatever strategy, FX Market Fusion, whatever strategy you trade in, right? Go ahead and look for the signals below the 72.20 to buy only. If there's no signals, maybe price is going to go further down. Maybe Chris is right. It's going to get down to 69. And if it does, take a look at the daily time frame. There's actually going to set up a divergence level on the daily time frame, which is not a bad deal. So you may miss out on an opportunity, but you'll be able to get a bigger upside move based on divergence sitting up on the daily time frame, which is great. That's what you want. But this is the thing. Because I'm looking at the dollar right now to be weakened this week and looking for a short-term move, we want to go ahead and see if we can grab 20 pips out of the market. Chris spoke about last week's trade, US dollar Canadian. We said 20 pip grab. It took us 2 positions. We made our money. We took profit on that trade. We got out of that trade. I'm going to do the same thing this week, but not on US dollar CAD. I'm going to go to the Euro US dollar. Now, I know there's an opportunity on the US dollar CAD as well, but I'm going to point it out on the US dollar Euro US dollar right now. We said we promised a trade. Let's get to Euro US dollar right here. I'm going to go to the chart right here and let's place the trade. So, and by the way, this is what I want from you. Okay, I want everyone that does follow this trade. Look here. This is not saying you must do this. This is saying this is what I'm doing. This is my opportunity. But if you do take this trade, I want you to make sure that you go ahead and post it on social media. Let everyone know that you are in this session. This is our first episode. This is the weekly investment draft first episode, episode 1. I want you to go post it, let everyone know, share the video, smash the like button right now. Smash the like button, subscribe to the channel, and tell them that you got into this session and this is what you did. Any trade calls that Tyson's calling, Chris is calling, what I'm doing right now. Talk about it. Let everyone know. We want to go ahead and make sure this message is getting out there. All right. So this is the deal. On this trade, Euro US dollar, I don't care what time frame you want to look at. You can go to move it to the 5-minute, 10-minute, doesn't matter. But what I'm going to do is I'm going to use a tool called the Matrix tool here on this chart. And on the Matrix tool, I'm going to go ahead and I'm going to add in 5 positions. 5 positions. Work out your equity. And I've done some videos on this, and I'll probably do some more videos on this about equity management, how to manage your risk properly. I know Chris has got a lot of his insight, and Tyson as well, about how they manage their risk. And there's definitely a recipe on how to be able to manage your risk on your portfolio. You don't go ahead and trade with 100% of your portfolio. You take 40% of your portfolio, and you be aggressive on that, so that you've got buying power to get yourself out of positions that you've got yourself in if the trade doesn't work in your favor. There's a lot more conversation around that. We'll have to have that conversation some other time. So we're going to go here and we're going to go ahead and enter the trade. We're going to put in 25, every 25 pips apart from each other. I want to go ahead and trade. I want to go ahead and I want to sell Euro US dollar. So I want to place my orders above the market and I'm going to go ahead and sell. And all I'm looking for, traders, is 20 pips. 20 pips on this trade. All right, not 200, 20. All right, 20 pips. And I'm going to go ahead and place the trade. So just so that you know, that trade's been placed. I've got my orders above the market. I'm in at 17.96. I'm looking for only 20 pips, and I'm going to cash out. Now, I said that there was an opportunity on the US dollar CAD. Take a look over here. We're already in on the US dollar CAD. There it is there. We've got a buy position. We're up about a couple of pips right now. We bought in at 126.07. 126.07. This was the trade that we took right here. Okay, same thing. Same setup. Nice support right here. We had an indecision candle. We got in. We actually were supposed to get in on this trade right here as well, the second trade. So which means that we would have been up on 20 pips already. But because of spread, we did not get in on that second trade. That's okay. I'm still expecting another 20 pips to go up. So both US dollar CAD plus the Euro US dollar, we're both looking to sell the dollar. All right, we're getting rid of dollars and we're buying CAD, and we are sorry, my bad. We're buying the US dollar. We're getting rid of CAD and we're getting rid of Euro at the moment right now. So we're strong dollar right now, but in the short term, come Wednesday, that 20 pips you should be out of that trade before Wednesday and grab your 20 pips, get out. In fact, if it doesn't happen today, it'll happen through the morning, and by tomorrow, within 24 hours, an intraday trade, you should be out on that trade. Now again, if you guys place that trade, you're doing it, however you do, bad or good, I want you to go ahead and post that information in social media so we can go ahead and track the stuff. We want to make sure that we keep track on what's going on, the signals we're calling, the trades we're calling, and we want to keep this thing flowing, right? We want to keep it absolutely flowing. So anything that Chris talked about.
But
yes, Chris.
This world is full of a bunch of snaky, junky, fakey people, and you've got 3 pros that do this for a living, for real, every single day. We need millions of people getting this information and listening to us because there's a lot of junk out there. This is the real deal.
Agreed.
And we need your guys' help. Like we have 500 views a week. Guys, we should have 500,000 views a week. Help us get this message out there if you can. Yep.
There we go. Sorry, I was muted. I mute myself when you guys speak. So smash the like button. That's how you help us. Smash the like button, and that's how you get the message out there. So yeah, I appreciate that. All right, Tyson, Chris, anything else you want to add as we close up the session today?
Look, I just want to echo what you guys just said. Look, we're here talking about stocks, options, Forex, cryptos. I mean, if anybody is trading right now, you're probably trading one of those asset classes. Seriously. So you're talking to real traders. We're doing this, live every single day, all week long between trading rooms that we all have and sessions like this. So it makes a big difference for this. This is what's crazy is like, for us to be on YouTube like this or our channels, and if this becomes a weekly investment draft podcast, so be it. But to shamelessly ask, like, hit the thumbs up button. Look, if people just know the deal, like the formality is this. If you like the content, a thumbs up and a comment for this video, for these sessions makes a huge difference to help spread the word. So it does go a long way. So yes, we will ask for it, but just know that if that becomes a routine when you're joining these sessions, keep those comments coming in. And look, we're here to trade. We're here to trade. We're here to talk, and you're not going to miss an asset class. And so we have skin in the game, and all these trades we're talking about today, positioned accordingly. And what's amazing is we all have very different systems and strategies, but we all get the job done. So that's what I like about it. And so there's a lot of great nuggets and gems to take away from these sessions. And I'm excited, fellas. The weekly investment draft is going to be a lot of fun. We're putting a lot more, kind of bells and whistles behind it. So I look forward to seeing what the thumbnails look like, what the videos look like. And anyway, it's going to be a great session. So make sure you get it on the calendar, make it a regular routine, tune into these sessions for us every single week. Thanks.
Yeah, real fast, just in closing, this whole investment draft idea, like Gary said, Chris said, we want to make this we have similar styles, but we want to kind of keep track of how our trades are doing, bring our favorite ideas. We want to bring different ideas. We're all kind of speaking the same language today. I'm with Gary as far as the bullishness on the dollar. I would say, listen, I'm going to go into the Aussie dollar. Gary's going to choose the euro dollar for his trade in the dollar CAD. So we're saying the same things, but 2 different currencies. We'll keep track of how they're doing. But yeah, it's all about helping you guys understand that you can do it and giving real voices to this business. That's awesome if you do it right.
Well, fantastic, guys. I'm not going to add anything to that. I think you guys really nailed it there. It said it exactly how it is, and I appreciate everyone being here. Once again, go ahead and subscribe, share, and smash the like button. Let's get this video out, and I appreciate everyone. Tyson, Chris, thank you much. Thank you very much. Really appreciate you guys. Great insight, always great insight. And we can definitely learn from that. So with that being said, traders, have a fantastic week of trading. We'll see everyone back again, same time, same place, here on the weekly investment draft on a Monday at 1 o'clock Eastern Standard Time. We'll see you then. Thank you.